Hello, everyone. Welcome to today's panel on Assessing Investment Attractiveness of Kazakhstan. My name is Enid Lee, and I will be your moderator today. I'm a vice president in JP Morgan's Sovereign Advisory Team, where we advise sovereigns globally on credit ratings, positioning, and fiscal policy considerations. Unfortunately, Minister Kwantarov couldn't join today due to an urgent meeting with Prime Minister, but he sends his regards. I'm very honored to be joined by Vice Minister Absal Abdi Karimov of the Ministry of National Economy of the Republic of Kazakhstan, Arvind Ramakrishnan, Director at Fitch Ratings, Maximilian McGraw, Associate Director at S&P Global Ratings, and last but not least, Clément Bernot, Research Manager at the Harvard Growth Lab. Max and Arvind have covered Kazakhstan extensively for S&P and Fitch, while Clement is leading a research team on Kazakhstan's new growth model and diversification opportunities. I'm very excited to hear from the experts today, and we will spend the next 50 minutes on a range of different topics, including Kazakhstan's rating drivers, reform progress, and investment trends and policies. So without further ado, let's get started. I'd like to start the discussion with a question on Kazakhstan's credit ratings. Kazakhstan is currently rated at BBB with a stable outlook by Fitch and BBB minus with a stable outlook by S&P. And I'd like to start with S&P's view. So Max, you have covered Kazakhstan extensively for S&P. Could you please share your views regarding the key drivers for Kazakhstan's ratings? For instance, what are some of the key credit strengths and challenges that you see?
Thank you very much, Enid. My name is Maximilian McGraw. I'm a sovereign analyst at S&P Global. And thank you to the AIFC, the organizers, and the Vice Minister for hosting this forum today and inviting me. So we last affirmed our BBB minus sovereign rating on Kazakhstan in April, and the outlook is stable. So the two key strengths of the rating are the government's fiscal position and the economy's external position. Government debt is modest at just under 30% of GDP. Government assets more than cover this, placing the government in a net asset position of around 3% of GDP. And we believe prudent fiscal planning will sustain this net asset position over our forecast horizon out to 2025. So the assets were primarily built with budgetary surpluses generated during a period of high commodity prices that ended late 2014, although we do seem to be entering a similar cycle now. And they're mostly accumulated in the national fund and invested abroad. Because they're invested and held abroad, they also support the economy's external position vis-a-vis the rest of the world. So liquid external assets of the economy more than cover the external debt, and gross external financing needs are low. The National Bank of Kazakhstan holds ample reserves, which we estimate cover about 5 months of current account payments. Now, Kazakhstan is a major oil exporter, and oil revenues have supported its fiscal and external accounts. Now, while those revenues have been beneficial, the dependence on oil does weigh on our rating assessment, as commodities are subject to price movement and price volatility, as one can imagine. So further diversifying the economy, increasing wealth levels is one of the key challenges that we see for the rating going forward. We do view the institutional governance framework in a relative basis as limiting. So the centralization of decision-making inherent in the institutional setting does cloud the predictability of government decision-making in our view, and we have seen social upheaval in the past, but we have seen government policy change to be a little more responsive to societal priorities, which is positive. We also view that weakness in the banking sector can potentially weigh on economic growth potential, monetary policy effectiveness, and the fiscal burden of the government, although we note that there has been great improvement recently in the banking sector following the asset quality review initiated by the authorities a year or two ago. Finally, while monetary policy was previously a weakness of the rating, we have seen a steady improvement in the recent years. Dollarization levels have decreased, interventions in the FX market have decreased. The national banks announced plans to withdraw from state support programs, which should increase operational independence and help them focus on inflation targeting. So there's also been some policy improvement there as well. So I think that's overall a basic review of the rating. I hope that's helpful.
Thank you so much, Max. This is really helpful and helps to set the stage for our discussion today. And next, I'd like to turn to Arvind. Arvind, you have recently concluded Fitch's review on Kazakhstan, and it was the first in-person review since the pandemic. So is there anything you'd like to add on the credit story? And for instance, I'm interested to know, how has Kazakhstan fared compared to its peers during the pandemic?
Yeah, thank you very much, Enid, both for the invitation and also for your question. So firstly, with regard to Kazakhstan's performance during the pandemic, from a ratings perspective, Kazakhstan was actually quite resilient. And indeed, I would echo what Maximilian said, that the fiscal and the external positions of Kazakhstan, especially the external position, is quite an important rating strength for the credit, for the sovereign. Yeah, and also the debt levels are quite low, and that did not really change during the 2.5 years or so of the pandemic. So we had Kazakhstan at BBB stable throughout the duration of the pandemic, and of course we affirmed it quite recently, that is last month, quite comfortably at BBB stable. With regard to any other factors to consider on the credit story, I would just say that obviously, though without overstating the importance of this, governance is of course an important component of our rating model, and it's come more sharply into focus since the events of January and the subsequent government policy responses, and also more recently the referendum which was passed and the new constitution. Without going into too much detail into that, I would say that we at Fitch are watching this with an open mind, but also with caution, given that like decades of there's been perhaps decades of institutional resistance or like entrenched networks which have to be overcome in order for the reforms to succeed, both from meeting a quantitative target perspective as well as from a societal and political sustainability perspective.
Thank you so much, Arvind. And I think this is a really good segue into the next question. Now that we've heard from both Arvind and Max from the rating agency view, I'd like to switch to Clement. Clement, I understand you were in Kazakhstan recently as well. Could you talk a bit about your work there and your views on Kazakhstan's reform program? So for instance, what reforms do you think are the most significant?
Absolutely. Thank you, Enid, for your kind introduction. And most importantly, thanks to the organizers for having the Harvard Growth Lab represented in this distinguished and already very interesting panel. We indeed have currently research work ongoing with Kazakhstan. It's not a new thing. We've been looking at Kazakhstan for more than 15 years now at the Growth Lab, but we're currently engaged in much more intense, much deeper effort. That is a very applied effort to understand better, as you mentioned, the growth regime and what can be done to improve further in the future. So this is just to say that the general direction of our research is slightly more maybe fundamental, or we're not directly dealing with the fiscal position or the external position that Max was referring to. We're looking at this, especially at one of the key drivers of these two metrics, which is the underlying quantity, quality, and sustainability of growth. When it comes to Kazakhstan specifically, we're looking at, I would say, the past, the present, and the future. We're interested in the past to understand what Kazakhstan's growth engine has been. Unsurprisingly, we are looking at an oil-driven growth model where a very dynamic expansion of the oil and gas sector has fueled the growth of the country, including through the development of non-tradable service activities. At times, and my colleagues from S&P and Fitch know that way better than me, this has presented risks, and we've seen that in construction in the late 2000s, and we've seen a pretty protracted issues in the banking sector since then. At the end of the day, however, our assessment is that in spite of repeated and sustained efforts by policymakers, a second an independent engine of growth, independent from the oil economy, has remained elusive. So that brings us to today, and you asked about the kind of strengths and challenges that we see Kazakhstan relying upon or facing. We see a number of strengths. One is that since August 2015, the exchange rate does not stand in the way of economic diversification anymore. We find that that relative price correction, while not sufficient to ensure competitiveness in a range of other activities, is at least a necessary element for a more balanced growth path. So that's the first one. Second, we feel that some lessons have been drawn on some of the excesses of the past. The situation in banking side, while far from perfect, is much better than it has been. And if anything, some metrics actually point to large amounts of domestic capital currently sitting unused and waiting for high reward investment opportunities. Third, we also see that a number of important policies have been implemented that we think have the potential to pay off in the midterm. And here I'm thinking about infrastructure development in particular, under the general umbrella of the Neutrality program, which is at least one attempt to tackling the connectivity issue that Kazakhstan, by definition, are because of geographic constraints that are not amenable to policy, is facing. Now, in terms of challenges, we see three areas that are, let's say, high on our agenda based on our analysis. The first one is improving further the macro financial framework. We believe that a lot has been done on trying to stabilize to mitigate, let's say, the effect of oil swings on the real economy. We believe, however, that more can be done in a more transparent way, in a more structured way, and probably there's still a little bit of space to improve the way oil revenues are managed at the national fund and government level. We also think, in terms of microfinancial framework, that there are important issues with access to finance. This is high on the agenda. However, some of the policies that have been implemented, while having some success, have also proven very distortionary, and also pose some issues, I think, as Maximilian was referring to, in terms of transmission of monetary policies or the taxation. The second challenge we see is more broadly the question of competition, governance, and the role of state-owned enterprises. It's no secret that competition has been imperfect in Kazakhstan, but in that realm, we see very high importance in focusing on increasing the performance and the governance of state-owned enterprises. One challenge there is to ensure that these state-owned enterprises, as redefined, actually continue to play a role, a catalyst and a coordination role to drive economic diversification. So it is not about making do with state-owned enterprises. It's about repositioning them so that they can play the most possible positive role for the economy. And third, a third challenge, which is also a very structural challenge, is skill development and capability development. We know that the ambition of Kazakhstan's government, and I assume Vice Minister Abdikarimov will talk about that, is transformational. Transformational in terms of evolving Kazakhstan's industrial structure in a pretty decisive manner. For that, there's a question around the availability of human capital. And on this, to a certain extent, we feel the investment in education may have been a little bit less obvious, or at least more concentrated than what has been done, for instance, on the infrastructure side. So probably there's room to improve there. Second, at the Growth Lab, we tend to believe that specific products and specific activities require very specific skills and very specific people, and we call that capabilities. We feel that there's a lot of room, and maybe we'll have time to talk about this again later in the panel, to work on the diversification strategy and put in place policies that will favor that and maybe avoid some of the pitfalls of previous efforts. And then finally, in conclusion, you asked, I believe, how I assess or we assess government reform efforts. The short version is, I will tell you in 5 years. But joke aside, we do feel that we're in a key transition period. And in the last week, as you mentioned, we were indeed in Kazakhstan consulting with a number of private sector players, with entrepreneurs, with investors, and we do feel that on the ground there is high momentum for reform. So what policymakers could call high expectations, we call momentum. And in any case, it seems that the space of what is thinkable or what is possible in terms of policy has expanded a bit, and we find that a very positive development.
Great. Thanks so much, Clement, for taking us through your research and your findings. And it's great to hear about the reform momentum going on. Very exciting developments. Next, I'd like to turn back to Arvind and Max. I had a question about the impact of geopolitical developments in the region. And how do you see the government's fiscal and monetary response during this period? So perhaps Arvind could start first this time, and then I'll be interested to hear from Max as well.
Yeah, sure, Enid. So the government's fiscal response, obviously, when the crisis in the Ukraine started with the subsequent sanctions, so it was multifold. From the government's perspective, it seemed clear to us that it was important to restore confidence in the tenge, right? Because the tenge obviously had a big hit in the initial days of after the conflict began. So which is why we saw a sharp increase in interest rates from the monetary policy side, and we also had the policy imperative to prevent deposit flight into FX, which is why we had the preferential interest rates which were introduced for deposits which would be held for at least 1 year in the local currency. And our initial view on that is that these measures have not, have had an impact in reducing volatility. So the tenge is largely back to where it was before the conflict began. And these measures have not really impacted, in our view, the ability of the tenge to act as a shock absorber, right? On the fiscal perspective, from the fiscal perspective, of course, there was already some measure of government thinking going into place to have more of a stimulus after the unrest that we saw in January. And arguably that intensified. So we had about 1.2 trillion tenge, which has been provided as stimulus to the real economy. The effectiveness of the targeting, I suppose, still remains to be seen in terms of how that can impact, because a lot of these are, say, anti-inflation measures. Right, so we have those. So these are just some of the policy measures that we have had, and then of course on the banking sector, where the banking regulator has been trying to reduce the role of the Russian parents in the three main banks, and that is also something that we have been watching. So these are just a few of the measures which the policy measures which the government has used in response to the conflict.
Thank you so much, Arvind. And Max, do you have anything to add on this?
Sure. No, I'll add a little bit, but I think Arvind made some excellent points. So our view has been that the spillovers from the recession in Russia and the complications for Kazakhstan arising from sanctions on Russia will likely weigh on economic growth this year, slow the pace of fiscal consolidation, and increase pressure on macroeconomic stability. Now, having said that, Kazakhstan's strong government external balance sheet, as I mentioned before, are available to mitigate these external shocks to the economy. And we have seen increased stimulus measures, as Arvind discussed. And since the beginning of the Russia-Ukraine conflict, we have reviewed the rating twice, actually, and both times we've affirmed it and maintained the stable outlook. So Russia and Kazakhstan do have very close ties. We don't expect a complete decoupling at all, but given the sanctions on Russia, it does create a more difficult operating environment in the region. Russia is Kazakhstan's largest trading partner. It's a key destination for non-oil exports, both part of the Eurasian Economic Union. It's a key source of investment as well. So there are some growth headwinds. Now, having said that, real GDP outturn was quite strong from January through May, 4.6%, which is ahead of our forecasts. High oil prices are supporting economic activity and the external position, which posted a surplus in the first quarter of 2022. And of course, the increased revenue from higher oil prices has offset partially this increase in government spending to support the economy. And all of this points to the resilience, I would say, of Kazakhstan's economy to the fallout from the Russia-Ukraine conflict.
Thank you so much, Arvind and Max. It's really helpful to hear about your insights on the policy response and also about Kazakhstan's resilience and also buffers to deal with external uncertainties. So turning on to Vice Minister. Vice Minister, thank you so much for being with us today. I saw that FDI in Kazakhstan has been promising, increasing by almost 38% in 2021, and the government recently approved the new investment policy concept of Kazakhstan until 2026. Could you share with us more about the government's investment policies and also the key priorities of the government?
Thank you, Enid. Thank you so much. First of all, I'm very pleased to join this important session today, and I would like to welcome the other speakers and participants as well. Indeed, over the past year and a half, we've seen a gradual increase in investment activity in Kazakhstan. Total volume of investment in fixed assets for the last 5 months of this year amounted to 4.6 trillion tenge, which is 2.5% more than the same period of last year. The main driver of investment growth was actually manufacturing industry, showing an increase of 52%. FDI, as you mentioned, last year was increased by almost 38% and amounted to almost $24 billion. In the context of industries, I would like to point out that the largest increase in foreign direct investments was in agricultural sector, like increase about 2.8 times, and also information and communications industry increased by 80%, 65% increase we see in the manufacturing industry. Last week, last week government approved the new investment policy concept of Kazakhstan until 2026. This document was widely discussed with stakeholders, business community, and especially with active involvement of the World Bank. There are 3 key strategic directions of the concept. First direction is the further development of investment ecosystem, which focuses on the formation of a transparent and predictable investment policy. Second direction is to promote investment activity in the private sector by creating an unrestricted and stable access to a market and starting the business. Third direction is unleashing the investment potential of the economy. This includes development of manufacturing industry and service sector, capital amnesty, subject to their return back to the Kazakh economy, simplification of bankruptcy procedures, transfer of Kazakh companies from foreign jurisdiction and offshore zones to IFC jurisdiction and others. Manufacturing industry will become the main driver of increasing competitiveness of the economy. Key emphasis is placed on the growth of labor productivity, increasing the volume and complexity of exports, development of new productions of high grade products, and localization of production. At the same time, state support will be concentrated on mainly on the implementation of high-tech capital-intensive projects. Here I would like to point out that state participation will prevail in social projects that are strategic and important for the stability of society, like social facilities, transport, infrastructure, defense capabilities, etc. Last but not least, the government pays special attention to the implementation of ESG principles in our investment policy as one of the important elements of sustainable development growth. Thank you.
Thank you so much, Vice Minister, and we look forward to seeing the continued progress and investment. So now I'd like to shift gears a bit. Oil prices have risen significantly, which should be supportive for commodity producers, but playing devil's advocate, sometimes questions may be raised about whether high oil prices could potentially derail reform efforts. So Clement, I have a question for you, and I know you touched upon diversification earlier. I was interested in your views about Kazakhstan's diversification efforts, and do you have any suggestions?
Yes, thank you. No, indeed, the diversification effort is key, as we were mentioning earlier, in charting a growth path that is less dependent on hydrocarbons and hence probably more sustainable, less volatile, and at the end of the day, conducive to higher creditworthiness of the sovereign, of the government of Kazakhstan, but also of Kazakhstan corporate. So, in a way, all of that discussion is interrelated. The difficulty is, I think, was well summarized by a panelist in a panel that I attended yesterday. A lady from the IFC said, when oil prices are high, diversification seems unnecessary. When it is low, when the prices are low, diversification seems unaffordable. And that's a little bit the pitfall in which many oil countries have fallen. In that sense, I think it's important to give credit where it is due. And in the case of Kazakhstan, there has been a commitment to working on diversification, not only theoretically, but practically through very concrete policies since at least 15 years. One issue is, of course, that other emergencies have come up. To a large extent, the non-performing loan issues of the 2010s have taken a lot of policy space and also maybe prevented optimal allocation of capital to the most promising diversification option. More recently, as you know, the new geopolitical landscape creates very concrete and very pressing difficulties and challenges in, for instance, finding new physical export routes that again, must take up a large share of policymakers' minds. But back to our assessment of the results of these diversification efforts, I think we're looking at a mixed picture. Overall, over time, we find a stagnation of the share of non-oil tradable activities in GDP and in exports and employment. The picture is probably less encouraging if once you remove metal and metal products. There's been very large-scale successes in that area. But once you take this out of the picture, probably the rest of the tradable economy is looking less dynamic, at least in terms of exports. There are a few success stories, of course, and several of them are testament to direct policy efforts. I'm thinking about efforts around railways and rolling stock. I'm thinking about a number of successes in agricultural diversification, for instance. Now, you asked if we had ideas, and indeed, it is a field that we research very intensively at the Growth Lab, and we've developed a number of ideas over the years to look at this in, I think, an interesting lens. And those are the ideas of economic complexity and the idea of a product space. So we tend to think that diversification does not happen in vacuum, but diversification happens on the basis of what you already produce, and that products that are related to what you produce are easier to diversify into and may present promising prospects. So based on these methodology that we will not expand on too much, we feel there are a few broad ideas that are important to keep in mind when thinking about diversification today. The first is indeed, what I was referring to is build on what exists. We feel that what we call proximity or distance is very important, and it is much easier to build on what exists than to create activities that are far from the existing set of capabilities. In that sense, the success factors that I was mentioning, the key success cases that I was mentioning, I think go in the direction of proving that building on existing strengths is a promising one. Second, I think we need to recognize the challenges of remoteness and connectivity. In the past, policies have been very ambitious. They've been very aggressive, and they've been focusing a lot on what a country ideally would want to specialize into. I think maybe increasingly we see more focus on what is actually doable, and especially a very specific aspect of what is doable or not doable is what specific activities or tasks or products travel or don't travel well. In that sense, there's a little bit, there are encouraging global trends, and I'm thinking especially about the possibility to export professional services on a global basis. More and more, the expansion of telework has made that not only an exception, but slowly becoming the rule. So that's for remoteness. And finally, a third idea that we keep close to, that we keep, let's say, high on our own research agenda is the issue of regions. Kazakhstan, as everybody knows, is a very large country. It's also a very diverse country. North Kazakhstan's exports are 88% agriculture. At the same time, Almaty is a global city with thriving creative industries and a very large, high-skilled professional service sector. These two realities have nothing to do with one another. The west of the country, the oil Kazakhstan, let's say, is yet another case. The southern part of the country has mining and very different agricultural possibilities. So for us, and that's the way we're looking at it right now in the research project, we're looking at things in a pretty disaggregated way and making sure that we do not propose a diversification path, but a handful of diversification paths that correspond to the different regions of Kazakhstan. Hopefully, our work can be integrated in a broader government effort, and of course, we stand ready to head further and share ideas and be proven wrong whenever it is deserved.
Great. Thanks so much, Clement, for sharing with us your insights on the research. And I think your comment about the different diversification paths is super interesting. So the next theme I wanted to move on to is ESG, because both Clement and Vice Minister mentioned about it earlier. So for Kazakhstan, I think what is interesting is the environment pillar, because it is really relevant in the context of Kazakhstan being a commodity producer. So Vice Minister, I was wondering, can you please touch on Kazakhstan's carbon neutrality goals and strategy?
Thank you, Andy. Definitely. Today, the climate agenda plays a defining role in the medium and long-term development of the global economy. In this regard, I should remind the pioneering role of Kazakhstan in the region in pledging achievement of net zero emissions by 2060 and ratifying the Paris Agreement in 2016. Given the current and upcoming large-scale transformations, a draft of strategy for achieving carbon neutrality of Kazakhstan until 2060 is being developed by the government. This document takes into account the outcomes of the 26th of climate conference in Glasgow, as well as the possible risks of the carbon border adjustment mechanism, CBAM, being introduced by the European Union. Regarding the last one, I would like to inform you that local companies are actively preparing for the introduction of the CBAM, which is very important. It affects the competitiveness of local companies. Furthermore, necessary work is being carried out to converge national emissions trading system with the European system. As a result, we expect that we will have access to the international carbon market. I should also mention that we pay special attention to implementing ESG principles, as you mentioned, as to one of the important elements of transition to carbon neutrality. local companies have already been actively implementing ESG standards and related reporting. Also, I'd like to point out that it is compulsory to bear in mind that carbon neutrality entails the reduction of jobs in vulnerable sectors, especially in the coal industry and the related sectors. In coal industry, we have more than 30,000 workers. Therefore, our job to ensure that workers in these sectors will have sufficient alternative employment opportunities after achieving the carbon neutrality. Having said that, I would like to emphasize that Kazakhstan is going to implement its new investment policy in line with the taken commitments and goals of the Paris Agreement. Thank you so much.
Thank you so much, Vice Minister, for sharing with us the developments and also the government's priorities on this very important topic. So next, I wanted to go back to the topic of higher commodity prices. And I would like to ask for Max and Arvind's view, because how should we look at rating trends for commodity producers as their fiscal and external positions improve? And bringing this back to Kazakhstan, what could potentially contribute to positive rating outcomes? So perhaps Max could take this question first and then followed by Arvind.
Happy to. Thank you, Enid. Right. So oil prices are certainly higher. We expect an oil price of $100 a barrel for the rest of 2022, followed by $85 a barrel next year, and then a return to around $55. So those are the expectations that we're working with for our forecasts. And as been mentioned before, oil is the key sector in Kazakhstan, directly accounting for a high share of GDP, government revenues, and exports. So the higher oil prices will certainly be beneficial. While we anticipate that this is a bit of a temporary spike over this year and next year before returning to more trend levels, it does seem unlikely that these current higher oil prices will translate into higher rating movements. And additionally, on the fiscal and economic sides, Kazakhstan already scores extremely well. So there's not that much more space there from the oil price. But that being said, higher than expected oil prices, sustained high oil prices could have an impact going forward. There are other areas where we are looking for potential upside, for instance, in the banking sector or the institutional setting. So we could raise the ratings if the banking sector's health improves. This could, for example, be supported by further advances in regulatory oversight or improvements in corporate governance. And that would strengthen our view then on monetary policy effectiveness and reduce the risks to the government's fiscal position. Additionally, we could also raise the ratings if we saw improvements in the institutional or policymaking effectiveness through, for instance, significant progress on devolution of power, increased transparency and accountability of institutions, or a strengthened business environment. I think these were some of the topics that Clement had brought up earlier as well. So we see eye to eye there a bit as well. Thank you, Enid.
Thank you so much, Max. That's really helpful. And over to you, Arvind.
Yeah, so I'll limit my comments to what like higher commodity prices mean for Kazakhstan rather than oil producers as a whole. Our oil price forecast for this year are actually higher than Max's. So we expect $105 a barrel annual average this year, going down to 85 next year, and then like normalizing at 65 in 2024. So firstly, let's just get like the negative rating implication out of the way, which is that, like, you know, of course, like for many commodity producers, I mean, a big negative commodity price shock would cause us to look very closely at what this means for public finances, possible materialization of contingent liabilities, possible lower flows into the oil fund and hence on external finances. I don't think that that's really much of a concern, certainly not this year for Kazakhstan. Yeah, but going forward, given the higher oil price expectation that even at the start of this year, obviously that the overall that is a net positive for Kazakhstan. So to give just one example, when we had the disruption to exports through the CPC earlier this year, right? I mean, the fact that we expect higher oil prices did help make up for the forecast, like the overall export figure in terms of the value, if not the volume. right? And we already consider the size of the NFRK, which the authorities are committed to keeping at around 30% of GDP. And that is, of course, quite dependent on oil revenues and hence the oil price. So higher oil prices would be positive from that perspective. And we also view positively, and we noted it in our latest rating action as well, the intent of the authorities to increasingly fund from domestic sources, because the NFRK does count as an external source of funding, and to keep the fund at or around 30% of GDP, regardless of where the oil prices are at. So yeah, I mean, further building of fiscal and external buffers would all other factors being equal, be positive for the rating.
Thanks so much, both Arvind and Max, for taking us through the positive rating triggers and your views regarding the higher commodity prices. So I just wanted to switch back to ESG. I was interested to hear how both Fitch and S&P assess ESG, and also your views on Kazakhstan's performance. And Clément, please also feel free to jump in if you've been looking at ESG on your research as well. Would Arvind like to start, perhaps?
Sure. I'll make a short comment on that. So obviously for Kazakhstan, as for, I would say, all major commodity producers or commodity dependent economies, right? Obviously the E factor or the environmental factor becomes is something which we consider highly relevant to the credit rating, right? Because all things said, it does have a negative environmental impact. To be honest, at the present time, and perhaps even in the immediate future, we don't see ESG as necessarily having an immediate negative impact on the credit rating. So we don't consider it a direct negative rating sensitivity at the moment. That does not mean that it is irrelevant, because considerations of diversification don't just happen. I mean, of course, the primary logic for them come from an economic perspective, but increasingly it is also coming not just in Kazakhstan but in other countries from an ESG perspective as well, to reduce the negative impact on the environment, to boost the skills of the workforce, and ultimately to improve governance as well. Quick word on governance. So I alluded to some of the reforms which have been announced by the government, and we now have a new constitution in place, right? The ultimate stated aim of these reforms is to improve governance. And governance by itself is somewhat difficult to measure. So the World Bank governance indicators are one way of looking at them, but we do look at that very closely. And if it leads to a credible improvement in the quality of governance, which we think will take time, then that could be positive for the rating in the long run.
Thank you so much, Arvind. Clément or Max, is there anything you'd like to add?
Sure. Again, maybe I can bring a perspective that's more centered on the growth aspect of things. For us, the question is: does an ESG compliant or pro ESG growth model look different from a growth model that would completely abstract away from ESG considerations? We feel in terms of the G of the governance aspects, it does not. I highlighted some aspects of the governance issues related to competition, related to state-owned enterprises. We feel that those are in any case important policy areas that the country should be working on and is working on. Where probably the model will change a tiny bit is related to the E of ESG. So we see the environmental demands as mostly in the perspective of diversification opportunities. And here we see environmental concerns on the global level changing the relative value of diversification opportunities. So of course, it creates headwinds in highly energy intensive exports, and CBAM is already maybe the first shot of more generally adopted trade barriers that will make energy intensive products or CO2 intensive products less attractive as diversification opportunities. But it also creates new opportunities, and here there's, especially for a country that does not have a very extensive manufacturing tradition across many manufacturing sectors, fast evolving technologies in the green tech space might actually be an opportunity to leapfrog some of the evolution and actually diversify into products of tomorrow without having manufactured the products of yesterday.
Great, thank you so much, Clement. I do have good news for all of you that just came in, and we're very honored to have Minister Kwantarov joining us very shortly. He is able to make time to greet us today, so I'm very excited to introduce Minister Kwantarov.
Hello everyone. Thank you, Anit, for moderating this session and give me the floor. I want, first of all, to apologize for being late, and want to thank Mr. Hamzal, our Vice Minister, for substituting me, and also for, thank you for having me for these post greetings. Hello, Maximilian. Hello, Arvind, Clement. So I can see everyone here and all the participants. So I'm very grateful, and these AFD Astana Finance Days have been very productive these 3 days, and actually we had very intensive discussions with the global community representatives, with rating agencies, with different companies and investment banks, and also with the JP Morgan. So I think it will be for the good of our economy, for our people, and in general, I think for the regional economy. Since many of the global issues and also some regional issues have been discussed during this AFD, we will definitely take the notes and use them in forming the new economic policy that we are working on now, and also maybe in the net zero strategy that we are also drafting at the moment. So in general, so these are my greetings, and I also want to thank you for such an active participation and supporting us. Thank you.
Thank you so much, Minister. This has really been a fruitful discussion. And thank you so much, Minister, Vice Minister, Arvind, Max, and Clement for sharing your time and your views and very valuable insights with us today. And thank you, AFC, for inviting us to join this very meaningful panel and Astana Finance Days. And thank you all for joining the panel, and wish you enjoy the rest of your day. Thank you so much.
Thank you. Bye.
Thanks, Enid. Bye-bye.
Thank you.
Bye-bye.